Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about some recent job data being released today, which has began to spook the market a little bit, and ask the question, is it beginning? And I'll explain to you what I mean by that in a little bit. As well as that, the US reminds the world that the 9th of July is soon approaching and trade deals need to be done. But before I get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, I want to ask the question, are we beginning to finally see the signs of the effect of tariffs on the US economy? The reason why I ask that is because the ADP job report was announced at its lowest level in 2 years. In fact, the private payroll increased by just 37,000 versus 115,000 expected. Now, of course, there's a lot of analysts out there. I'm not one of them, who tends to think that the ADP could be an early indicator for the non-farm payroll. Because non-farm payroll is obviously the big job number which we look for. Some analysts do believe the ADP indicates what the NFP could potentially be. I've never, in my career or my experience in trading, I've never ever once seen a correlation. However, what I will say, that is a damning number. A damning number. And I'm not the only one who thinks it. Because at the same time, with that number coming out, the blame game has begun. By all means, it's not my fault, it's your fault. Because Trump, straight after the ADP announcement, started blaming Jerome Powell. Straight after the announcement. This is what Trump had to say. He is unbelievable. The ADP number's out. Too late, Powell must lower the rate. Europe has lowered 9 times. 9 times. So again, despite the fact, I've talked about this a lot on these broadcasts, about obviously these tariff concerns and the trade war concerns, and we have yet to see any economic data affected by it. But like I've said before in other broadcasts, it's going to take a while for us to start to see the impact of tariffs on the US economy and the global economy. Don't forget yesterday, OECD downgraded economic global growth because of tariffs. So we have yet to start to see data yet really imply or really illustrate, obviously, this the impact. Hello, my friend. Good to see you, buddy. How you doing? Yeah, so we've yet to see the actual implications of the trade war on economic data. So the question I have to say, or question I have to ask, and I ask for all you good people to let me know what you think, is this the sign of things to come? Are we finally going to beginning to see the impact of tariffs and this trade war on the US economy? Now, of course, after this ADP report, it has scared the market indeed. Good to see you too, buddy. Really good to see you, mate. Looking sharp as always. So are we going to start to see? Now, of course, like I've said already, I've never, ever seen a correlation between the ADP and the NFP. But of course, this is really going to now build up the anticipation and the excitement of the non-farm payroll. I mean, the NFP is always a key market driver. It's always big news. But because of this shocking ADP report, are we going to see more importance or more impotence on the NFP this Friday? And I repeat, I will do a watch along, because I think the ADP has put a cat amongst the pigeons. So I do think the NFP is going to be really closely looked at this Friday, more than usual. And it is looked at a lot anyway. Anyway, the expectation for the non-farm payroll is for it to come in at 130,000. The previous reading was 177,000, which was indeed better than expected. Anyway, moving on to other news today, which is happening. Trump makes another phone call, or he's hoping to make another phone call, but it's now looking very, very doubtful. Because basically, in a nutshell, the hope that the market had that President Trump and President Xi of China was going to have a phone conversation to try and dilute these ongoing trade tensions. It's a good question. Let's answer this question straight away. What is your prediction about the tariffs that Trump imposed on Europe? Will he backtrack as he did with China, or will he stay on this for a while? Right. First of all, that's a great question. Absolutely superb question. Secondly, I did a show on 2 days ago about the taco trade. It's a term that Wall Street has been using to basically buy dips when the market drops, and it's proven very successful because, like I said, the S&P 500 had its best May in 30 years since 1990 because of this taco trade strategy. Now, this taco trade strategy stands for Trump always chickens out, as in relation to the Trump will say he's going to do tariffs, and then the next minute he changes his mind the next day. Like either puts them on delay or decreases them. Now, the thing about this is that somebody told him what taco trade means, and they told it to his face that it means Trump always chickens out, and he wasn't very happy about that. So whether or not he now doubles down, which, to be fair, he has since that press conference, because again, he's now attacked China again for breaking the deal, and he's of course increased steel and aluminium tariffs to 50%, more of which we'll talk about in a moment. So he hasn't, I can't see, he's put the delay on 50% tariffs on Europe till the 9th of July, is when reciprocal tariffs will kick in anyway. I can't see him personally at the moment backing down because of it, but he would have to, because it makes economic sense for everybody. Apparently, negotiations between the US and the EU are going quite well in, I think it's Geneva as well. In Switzerland, they're doing it as well. Well, actually, no, so it's Paris they're doing negotiations in. But look, again, unless he forgets that comment or what taco means, I think he would dig his heels in even more. And he has got a particular hatred for Europe. Because don't forget, in the past, he said Europe was made to destroy the United States. So I think Europe is going to be very, very tricky to negotiate. But yeah, I can't see, unless he forgets what taco means, him stepping back. But great question, all the same. Yes. Anyway, so going back on to brilliant question. Going back on to what he said about President Xi, he's basically said, I like President Xi of China, always have, always will. But he's a very tough and extremely hard to make a deal with. So this, of course, puts dampers on the potential trade deal or trade negotiation between the US and China easing. So again, this has an impact. Talking about tariffs and reciprocal tariffs, like I've already mentioned, the 9th of July is the deadline of when the reciprocal tariffs are supposed to kick in, are supposed to start. And of course, US has reminded its trading partners, or they, as they put it, a friendly reminder that the 90 days pause of reciprocal tariffs expires in early July, 9th of July to be precise. And here's the thing, which I again mentioned yesterday. The only agreement we have announced or has been announced so far is with the UK. And even then, that hasn't been signed. And of course, going back to the original question, will he back down on with the EU? Don't forget, tensions have now increased, of course, because he's increased tariffs on steel and aluminium to 50% starting today. Starting today. Is a good question as well. What does it mean when we see a strong rise in the S&P 500 and a very strong fall in the dollar, and the forecast says it will reach 91 points? So you're talking about a weaker dollar and a stronger S&P 500. Well, obviously, they want a weaker dollar for trade, etc. This is a frappe, by the way. It's not milkshake. I'm not 12. When you're talking about dollar each, I'm guessing you're talking about the dollar index, obviously, reaching 91, which where is it at the moment? Currently at 98. So they're obviously predicting that a bullish run on the S&P. Many people still think that we're going to have a bull run on the S&P 500. You know, obviously the Mag 7 is still driving it and still performing very, very well. Bar Apple. Apple's the only rotten core in the Mag 7, which, to be fair, it's not tariffs affecting Apple. There's a number of things. So basically what they mean, a strong rise in the S&P, that the market is bullish, but the dollar is weaker, which what ideally is what they need, obviously. A weaker dollar for exports. So that's what they mean by that. But great question, all the same. Very, very good question. Where was I? Oh, yes, here we go. Tensions are mounting. Yeah, because obviously they've released 50% tariffs on steel and aluminium, risen by 50% today. The only country not affected by the 50% tariff is the UK, which remains at 25%. Now, this is my original point, what I just said a minute ago. The deal hasn't been signed off between the US and UK because the US-UK trade deal is tariffs on steel and aluminium to be zero. Oh, very bless you. Very kind of you, buddy. Very, very, very kind of you. Nice to see you again as well. You're looking sharp as always, bud. Thank you very much. Thanks. Yeah, so it's 25%. But of course, like I say, the deal's not quite over the line. So this whole 50% on steel and aluminium has obviously increased tensions between the EU and the US and the rest of the world. But anyway, enough of that. Let's have a quick look at the market and see where we stand currently. Let's start off, of course, with the S&P 500. Like I say, this ADP report, not as big as the non-farm payroll. But as you can see, it is a bit tepid. It is dropped in the last 30 minutes. For the day, though, it is still remains slightly bullish. Currently trading at 5,980, up by 0.17%. So again, not ignoring the ADP. And there's something else I want to talk to you guys about as well. I want to ask you a question about this as well. Dollar index, pretty much, not dollar index, sorry, the NASDAQ pretty much the same as well. And of course, the Dow Jones, up by 45 points at the moment, so not too bad. If we look at the Mag 7, like we always do, Tesla, slightly down for the day. Well, not slightly, actually, quite a bit, actually. Negative 4.05%. Meta, tepid 2.49% up for the day. Microsoft, 0.31% up for the day. Amazon, up slightly, 0.17%. Alphabet, up again slightly, 0.32%. Nvidia, down slightly, 0.52%. So it's a mixed bag. Apple, though, in particular. Apple, I want to talk about Apple a bit more tomorrow because it is up slightly 0.90% today, but for the year so far, it's actually down between 19 to 20% down this year. And there's a lot of talk about Apple. Yes, of course, we've had a lot of talk about tariffs affecting it. Obviously, there's China manufacturing, there's Indian manufacturing, and then obviously the Trump White House and the Trump administration going after Apple, threatening 25% tariffs on Apple alone if they do not make iPhones or Apple products in the US, which of course has greatly, affected it. But there's something more to Apple, which I think could be really interesting in the coming months. Very interesting. And potentially Apple could come under more pressure, not directly related to tariffs, but to its core business, or Apple core, if you excuse the pun. But I'm going to talk about that a bit more probably tomorrow or maybe in the next episode. But yes, Apple is something I'm keeping a very close eye on, because I think we're going to see further pressure on it. Plus, as well as that, all the other Mag 7 companies have performed very well. The only one which hasn't this year really has been Apple, and obviously Tesla has had a bad start to the year as well, but Tesla's recovered slightly. But Apple in particular, I think, is something to watch. Anyway, I want to go on to another story. So what I want to ask you before I go on to something else, it's the question I have for you, and I want you guys to tell me what you think. Now, obviously, we've had the taco trade. The taco trade, which has worked extremely well. Like I said, the S&P 500 had its best May in 30 years, since 1990. And the taco trade has been working with people who've been buying the dips. But as well as that, this is why we're still seeing quite a bullish S&P 500. Because if you look at it, what happened on the 2nd of April, Liberation Day, since then, Apple has completely gained back its losses and actually gained further. Now, this whole fear of the tariff and trade war, is it more of a case that the market now is more trading on uncertainty than actually calculating or pricing in an actual crash because of this? Are they looking at it thinking it's just uncertain, just creating uncertainty, instead of actually directly crashing the market? Now, I think for the time being, the market's looking at uncertainty because, like I said earlier on, the ADP is the first possible indication we have seen of economic data, bar consumer confidence, obviously, because that's different. Bar consumer confidence, the only negative data we have seen since this tariff thing started. All the other economic data we've come in has been fairly positive or balanced. So unless we really start seeing serious negative economic data, is the market going to be trading or looking at it as uncertain instead of worrying about a potential crash? That's a question I have for you guys. So let me know what you think, what your opinion is. Anyway, on that note, I think it's time, of course, for a currency update. Okay. Like I said, we've had a weaker dollar over the last couple of trading sessions. It bounced back slightly yesterday, as it would do if it's under pressure. Since the ADP report came out, of course, it's then come back under pressure. It's the euro dollar. As you can see on that weaker job data, euro is back up to 1.1470. We're saying we can see that one as well, about that with the sterling, which, approached 135.70. So we are seeing a weaker greenback. Don't forget, the greenback looks set to have the 5th month of losses against the majors. And with dollar yen, which is really, really, really interesting as well, came under a lot of pressure because, again, of a weaker greenback. Currently trading at 143. Like I say, the Bank of Japan, in my opinion, has a little bit more wriggle room, or a bit more space than the Fed does. obviously, and they are expecting more like increase interest rates as well. So again, the dollar yen is under pressure, and we can see this, of course, with the dollar index as well, back down to 98. Will it get to 91 like that gentleman asked earlier on, which was a really, really good question. But I think for the foreseeable future, we are going to be looking at a weaker dollar, because of obviously the uncertainty of what is going on with the Trump administration and the decisions. But in general, I think there is general desire for the US to have a weaker greenback as well, which is going to drive it. So yeah, I do expect that to potentially continue in the future. And finally, of course, it wouldn't be one of my shows or one of my broadcasts if I didn't talk about gold. I always talk about gold. I love gold. Gold is currently back up and benefiting, of course, because of the weaker dollar. And as well as that, because of obviously the little bit of obviously uncertainty going on at the moment, currently trading at $3,370 an ounce. Now, if we look at a longer picture, because I like looking at longer picture to get a better idea of it, still way above that trend line, still very much potentially on a bull run. My only concern and the first real level of potential resistance is $3,447.82. And my concern there is it does look like we have a bit of a double top. But you can't not admit that gold still very much has its shine. Anyway, moving on to other things. This week ahead, what have we got? Well, we still to come this week. ECB interest rate decision, which is happening tomorrow, followed by the ECB press conference, EU GDP, EU retail sales, and of course, as I mentioned, US non-farm payroll, which most likely I will do a watch along on. But let's quickly talk about the ECB interest rate decision. I think it is expected for the ECB to cut interest rates. I'll be more interested to see what they say in the press conference regarding the current economic climate. Anywho, don't forget this, of course, is a live show. Like, we've had a couple of questions already. Don't feel free to ask questions or to, more importantly, I like sharing your opinions with me. Let me know what you think. What's your opinion? Like I say, oh, hit myself in the nose then. Like I say, let me know your opinion. I mean, do you think the market has now got used to this, this tariff thing and think it's not going to be that bad? They think it's just going to be more uncertainty instead of economic strife, because we haven't seen any real economic data to show the damage everybody thinks it could do. Or is it just delayed? Or is the market kidding itself? Let me know your opinion. Let me know what you think, because, it'd be nice to know. As well as that, if you're watching me on YouTube and you like this sort of thing, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you like this sort of content and you put up with me, my over-the-top enthusiasm for the market, by all means, give me one of these. It's nice to know that you like what we do. As well as that, I've noticed a lot of people watch the recordings afterwards. They don't catch the live, but they watch the recordings, which is great. I love any type of support possible. But if you are watching the recordings and you have got a question or an idea or something you want to share, by all means, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which of course will be tomorrow, as I go live every day. Okie dokie. If there is no questions, big shout out to Dr. Trade for asking those great questions and saying hello. That's really nice, and it's really good to see him. So I really, really appreciate it. But anyway, as well as that, another little side point. If you're not part of the OneRoyal family yet, and you want to know more about us, you can click on the link on the description below and find out a bit more about OneRoyal. Okay, if there is no questions, leaves me to say, don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.